Hello traders, you're welcome. In this video, you will understand what is market structure, difference between break of structure and change of character, and how to identify a valid break of structure and a valid change of character. Make sure you watch to the very end so you can understand all you need to know about structure. And it is important to understand what structure is and how to mark out your structure and also how to identify a valid change of character. Now let's go. Okay, what is structure? We already know that we are dealing with the market, right? Yes. Okay, now what is structure? There's a need to know what you are dealing with, its meaning before you think of how to solve the problem. So now what is structure? In simple terms, you can say structure is a pattern at which something is being done correctly, or you can say structure is a way at which something is being done right. You understand? Yes. Now, this is it. When it comes to the market, this is structure. Then the market creates what? Moves like this to create what? Key levels to create key levels. Now, all these are your key levels and these are your key levels. This now become your resistance key level. This now becomes your support key levels. This is it. The market creating all sort of structure like this. Okay, now that you understand structure, what structure, then now what is break of structure? Break of structure simply means when the market break a significant key levels or when the market breaks a key level. And you can see clearly the market is being respecting its level. So creating this form of structure, the higher highs, the equal highs and equal low form of structure, respecting its key level, its support and resistance. Then when the market now moves up and does something like this, that is what we call break of structure. Tap on its support level and break through the resistance level. This now becomes what? Break of structure. Or you see the market do something like this, respect its resistance level and then pull to the downside. So that means the market what has broken what? A key level, which is what? Break of structure. Now, how do you know a valid break of structure? Alright, there is a way the market breaks structure. The market can, there's a way the market moves. Yes, the market can just come, pull out of this level, and then weak back into this structure, which is this whole zones, weak back into the zone, and then continue to the downside. When you see a weak break out of these key levels, that is an invalid break of structure. A valid break of structure is when a full body candle broke out of this key level. That is when you can say, okay, this now becomes a valid what? Break of structure. Same goes with what? The sell side. The sell side. Now, when market breaks its structure, it this is it, it creates something like this. It creates that it put back, then this now becomes what? A key level, right? Yes. Now when market break this key level, it means what? Break of structure, pull back again into the origin that caused this break of structure. maybe most time 50% level, then pulls up to break this structure again. You see, this now the market is now creating what we call higher highs and what higher lows. This is how the market moves. So that same goes with the sell side. It keep on creating something like this, creates pull back into this origin. So it now creates what a key level here, then break that key level, now pulls back into the origin, create a key level here, now break that key level. So it now creates what? A lower high and lower low. If you take this to this part, you see it breaking its key level. If you mark at this your key level, you can see breaks to the key level, pulls back, then create another key level here, then you see the market break through the key level. So that's that for that. Let's talk about change of character. What is change of character? Change of character is when something changes from its original behavior, right? Yes, you can clearly see the market is already in an uptrend here, creating higher highs, and lower highs. All right, yes. Now, this is what you call change of character. When the market now decide to pull down, not to break this one, not to break this is recent higher, this is which is this higher, not to break this one, no, because the market can still break it and then boom. So that's not a change of character. So these are to know a valid change of character. Wait for the market to come and break what its low, this low here. So when the market break this low with a full body candle, something like this, that makes it what? A valid change of character. But should you start trading from here? No. Wait for the market to pull back into its original moves, and you then search for entry within anywhere, maybe 60% retracement or 60 or 75% retracement, or most time 100% retracement. But you don't have to allow the market break its high. When it's turned back to break its high, that's to tell you that it just came back to sweep liquidity and then continue to its direction. So what you should do, wait for the markets to get to any of these levels, or the market can just get, let's just use this as an example, 50% level. Then when the market gets to 50% level, what you should do now, screw back to any of the lower time frame and watch the market do this, not this. I'll show you what the market will do on lower time frame. Watch the market do this, creating what? Lower lows on the lower time frame. Immediately you see the market create two lower lows on the lower time frame. You can see that just two lower lows. That's to tell you that okay, yes, the market is done with this uptrend. It's now what? Pushing to the downside. So then the next move you should see the market do is something like this, pull down like this on the higher, then create what? Another what? Higher low that fail to break this higher, and then pull back to finally break all this low. So and then do something like this. You understand? So that just how it is. Now let's go to the chart where you will have more understanding. This is the chart. You can clearly see on the diagram here, and you will label this other part yourself to see if truly you are learning. So you know, if this is our high, if this is our high, then this is our low, right? Yes, so just label it high, low, and this low gave birth to this high, right? Yes, so this now becomes what? Our higher low, and this higher low gave birth to this low, right? Yes, this now become what? Our lower low, and this low now give birth to this high. This now becomes our what? Our current what? Higher low, and this higher low give birth to this low. This now becomes our current lower low. You can see. So in each of this place, you can see how market broke its structure here. You can clearly see how it broke its structure with a clear candle. You can see mark at this our lower low. You can see it broke it with a full body candle. That makes it what a valid break of structure. But should you enter the market here? No, wait for it to pull back to it to the origin. That what created this break of structure, and then so look for entries and then sell down. You see another break of structure here. You can see the market broke its structure here with a body of candle, but not like this. Though it's still, but you can see but small, but that is still what a valid break of structure. Then the market pulled back again. See what the market did. Yeah. So the market is about to change character from here, from a downtrend to an uptrend. From a downtrend to an uptrend. So you see a valid break, a change of character. This is our high here, and you see extend it. You can see from here it has already changed its character. Still extend it because the reason why I take this as I was supposed to take this as our high, but this high created a low that is lower than this low. You know this high created this low, but this low here, the because the market did a mini what change of which is a mini down move here. You can clearly see it here. A mini down move creating what lower lows here. You can see. But in the bigger picture, all these are called what retracement or correctional phase to create what an impulsive move. Correctional phase to create an impulsive move. You can see. So the market break what this high here with a clear body candle. Look at it here, full body candle. So that becomes our change of character. Should we enter the market here? No. Remember the textbook diagram we did. So the market has to pull back to the origin that created what this change of character. Then you look for your entry within this any zone here, any 50% retracement, 60 or 75 or 100% retracement, then you continue to the upside. And this is a clear break of structure. This is our high market. You can see I broke it with a full body candle here, and then boom, pull down again to create what you can see it broke this. You can see how the market came out to break this our higher, but it then weak back. So this break of structure is not what valid. It's not valid. Then this now become our valid one because you can see how it broke it with a full body candle, boom, to the upside to create what a higher high. And you can see how it's retracing back to this side. It might come back to test this 100% level and then push to the upside. And though if you check inside, you will see a mini what down move. When you go to the lower time frame, that's when you will see this clear down move. Maybe when you go to H1 or M15, you said you see it clearly, right? Creating lower low here. You can see. That's all you need to understand about break of structure and change of character. Thank you for staying to the end. I trust you learned something from this. Please subscribe, like, and comment, and see you on the next one.